Gregg Smith joins me now to analyze what's going on with this market. Greg, welcome back to the show.
Hey, good morning, Stuart.
It's a major league sell-off. Stocks way down, interest rates way down. What's your analysis?
Well, my father always said, hard come, easy go. And certainly investors are feeling that pain this week.
Wow.
But I think in a tape like this that long-term investors need to have a shopping list. They need to look around and pick some spots and look to pick up quality names that they want to own for the long term. But I think as you just started off the top of the hour on the show, the consumer is weakening. We're actually hearing two mixed messages from big tech in the last 24 hours. On the one hand, we heard Apple give actually positive numbers and talk about, a somewhat healthy consumer. But then we heard a negative forecast from Amazon talking about how they're seeing weakness going forward. But
look, big tech's selling off. Apple's slightly high, got $5 on that one, but the rest of them are selling off quite sharply. I was always told that when interest rates come down, big tech does very well. What broke that equation?
Well, I think right now also you're seeing a fear amongst tech that we are seeing so much spend. We are seeing these companies announce CapEx spending, particularly on AI, of spending tens and tens of billions of dollars. And also I want to point out today there's a lot of attention being paid to Intel. Intel, I think, is a microcosm. I think this is a broken company. They are having a death spiral March 2000 moment in terms of their decline. It's certainly weighing on the Dow as a member of the Dow. But I think that is more of an isolated event because they have a lot of battles going on.
Question of the day, which everybody wants answered, is this slide going to continue from here on out?
Look, I think that it's no secret coming into an election, there's always going to be volatility. I personally didn't think the volatility was going to start until after Labor Day, so I think the volatility will continue. And as I said, investors should have a long-term shopping list.
Should they buy now? I mean, you've got
I would pick some spots. There are some things I would start to pick up. I have a shopping list of other things I'd like to see trade lower. So I think the answer is yes. I think it's okay to start tiptoeing into the water. I think Amazon, from a technical level, approaching 160 looks good. I think made on more weakness. And one of my favorites, Goldman Sachs. I'd love to see probably buying that 20 or 25 points lower.
Okay, Greg, thanks for being on the show on a very important day. We appreciate it, sir.
Thank you.
Thanks.